Hello and welcome to Pro Trader Strategies market commentary for Wednesday, January the 29th. I'm Eric Wilkinson, and you very well may recognize me from mainstream media where I've talked about economic data, the geopolitical environments, and market analysis. Here in these market commentaries, I talk about the economic data, how I see that impacting the overall markets, but I take it a step further and then go into strategies that we can implement into our portfolio using options to increase that yield. So without further ado, let's get on with it. But I gotta say, past performance of any trading system or methodology is not necessarily indicative of future results. All right, with that out of the way, let's talk about the economic data. Not really a whole lot to see across the pond, but we've got a busy day here in the United States. One thing we've got coming out is the FOMC statement. So that comes out a little bit later. A lot of probably shoring up of positions ahead of that. Nothing really expected there. At 1.75, it's expected to stay there. But we did get some economic data here. Preliminary wholesale inventories came in at a negative 0.1%, expected to be a positive 0.1%. So that's good. We're seeing inventories move, and last month's number was revised down by 0.1%. It was unchanged, which was a bit of a bummer, but it came in at a negative 0.1%. So that is a little bit of a boost there. One thing that we got thrown on us was this wet blanket of pending home sales coming in at a negative 4.9%. It was expected to be a positive 0.5%. Now, we would have expected to see, with these interest rates starting to come off a little bit, maybe some better pending home sales. Well, one of the silver linings, I guess, if you're looking for a silver lining in this dreary number, is that there's just not a whole lot of inventory out there right now. It is a winter month. There's not a whole lot of inventory. So that number came off a little bit. So one thing to say about that is prices probably are rising a little bit with interest rates coming off. Those pending home sales maybe just cooling off a bit from all of those things. Prices rising because there's a lack of inventory. Well, that kind of keeps people from really buying if they don't find the house they like. So that hurts that number as well. Then we also got crude oil inventories coming in at a build of 3.5 million barrels, expected to be a build of only about 700,000 barrels. So again, a glut of oil coming into the markets. We've already talked about yesterday with the gasoline builds. Those are just not moving. They're continuing to refine these oil inventories into gasoline, but the gasoline is kind of getting shoved off to the backside there. So that's what we see a lot of time with these inventories. Sometimes we see these inventories come off a little bit more than what we're expecting, and that's usually because they're making the refined products. They're taking that crude oil and breaking it down into refined products, and it gets pushed off into the back rooms where nobody is really seeing those start to build up. Well, we're starting to see that with gasoline right now. But we've got crude oil coming off of its highs. It was looking pretty rosy for those crude oil bulls, but with this number, we're starting to see that wane a little bit and come off by about 25 cents today, sticking in and around that lower $50 a barrel, which is probably, if we continue to see these builds and that getting shoved off into builds in crude oil and other distillates, or gasoline and other distillates, then we could really see some more weakness here in crude oil, and that would make my whole theory of that $55 a barrel to about $57 a barrel kind of start to wane a little bit. 50 or maybe even $58 a barrel is where I was kind of expecting, 58 to 55. But we're below that now, and we could start getting a comfort zone there, build out a big bell curve here. We started building it out up here around that $58 a barrel. Well, we've got a little bit of a trough here, and volume node. We could easily see this start to build out and make a nice, pretty big bell curve. All right, moving over to gold futures. They are trying to make a little bit of a run today, but they are off by about 70 cents, well off the lows. Markets really have been back and forth. We are seeing equities in positive territory, but like the Dow Jones has gone from being up 150 to only up about 40 some odd and change. So market's really fluctuating. A lot of that having to do with shoring up positions ahead of the FOMC. We've got bonds up a half a point on the day right now. 61.26 up 16 ticks. That's a half a point. 32 is the full point in a bond. So pretty much retracing what we saw yesterday. I was expecting us to feel like we got a little overdone to the upside, but I think that when we're seeing these pending home sales wane that much, it's expected that we're going to see lower interest rates a little bit further. They need lower interest rates to kind of entice the consumer to come off of the porch and start shopping. Then we go over to the VIX. VIX is off by about 58 ticks. We are still in positive territory, and that is because we're seeing it come off a little bit because we're seeing the Dow Jones Industrial Average up about 121 points. You can see here on this chart, we have covered that gap where we dropped down a few days ago. Now we're starting to see a little bit of a recovery. Continue to see more coronavirus in China. They actually just shipped a whole airplane full of people back to the United States from Wuhan, and those people all seem to be okay. They had several testings throughout that flight, landed in Alaska and then back down to California. Everybody seems to be free of that virus coming back into the United States after going through those quarantine checks. But we are seeing the Dow Jones move a little bit higher despite the fact that we're seeing that bad pending home sales number. A lot of that is being driven by Boeing. We'll talk about that here in a little bit, despite the fact that they got crushed on earnings, or they missed on earnings, I should say, quite dramatically. We've got the NASDAQ up about 6 points on the day. Not a whole lot of oomph behind this market, though, today, and across the board. E-mini S&P is up 5 points on the day, but you can see bouncing up against that 78 Fibonacci there, finding a little bit of struggle to get above that at this point anyway. We did pierce above that earlier this morning, but have kind of peeled off some of those gains and start rolling back down. E-mini S&P is on a breakdown, 30-minute candles here. We can see right on the open, the market sold off to the lows. We have recovered. Most of this sell-off was from that pending home sales. That was the big wet blanket on the market today. As you can see, that's when we came to those lows. And then, you know, the silver lining of everybody talking about these pending home sales and the reason why they're kind of off a little bit is mostly because of lack of inventory, which, you know, if you can't find the house you want, you're going to not buy, right? Despite the fact that interest rates might be very attractive at this point. I would expect that the equities are going to struggle to rally today with all of the news and ahead of the FOMC statement, as people are really going to try and shore up some positions. All right, let's talk about mine. We've got Boeing. You can see here, if we can pull it back down here and try and get this to show what the earnings was. It doesn't look like it wants to come up for me, but basically they were expected to have a positive $1.80 something a share, and it was well below $2 negative. So missed by well over $3 a share, which is a pretty massive miss. Now, this is the beauty in earnings calls, because they obviously had an earnings call today as well. And the silver tongue of the earnings call was really that they were very open, and you know, investors love that. They're saying that they are ready to put the MAX into production, maybe even change the name of the 737 MAX, because even though it would be the same plane, they would just change the name of it to get rid of that dark cloud over that name and the connotation with the MAX being a faulty airplane. So, you know, they have done very well on that earnings call. We are seeing this well off the highs. They were up over $8 on the day. As you can see, they're only up about $4 on the day now. I would expect that the euphoria around that earnings call is going to wane a little bit, and people are really going to start worrying about Boeing. So I haven't covered this trade at this point in time. As you can see, it's still starting to accelerate to the downside, back below only up $4 a barrel, so, or $4 a share, and continues to downtick. So I'm staying with my short in Boeing. I do expect probably more bad news and more delays going forward in Boeing. So I haven't added anything or taken anything off with this trade at this point. All right, we're looking at eBay. Now eBay, on the other side of the coin, actually came out and beat on their earnings. They were expected they came out with 81 cents a share. I think they were only expected to have something like 70 some odd cents a share. So they beat on earnings, but their earnings call didn't go clearly as smoothly as Boeing's did. So shares of eBay coming off again. And we can see they're down $1, well off the lows though, so that's nice. I'm still in this. I look to go in there and sell the 37 calls in there, but you can see the volatility crush. Yesterday, those 37 calls were trading well over $1. Today, they're trading around 17 cents. So I'm not going to add anything at this point in time. I'm going to hold off. I think that because they beat on those earnings, we're going to see that at least migrate back to that $36 a share mark. I stayed in this maybe a little bit too long. I expected them to beat on earnings. We've seen the retailers not really do that well, so that would shift the idea that a lot of people did the online stuff with like eBay, which they did. They came out in force and that looked pretty good, despite the fact that we sold off on that good earnings call or that earnings result. So that's about it. I'm stuck with all of those. Haven't added anything else and didn't do any earnings trades yesterday, but I'm going to be looking to add a few earnings trades today, because today and tomorrow are basically the meat of the best earnings results coming out. So those are the ones we want to play in, right? So I'm going to be adding some of those. So follow me on Twitter. I'll be throwing those out there, what I'm doing. And that's about it for today, other than if you can't take that, take it easy.